Dreaming of retiring early and living a happy, stress free life is a goal for many of us. But have you ever stopped to calculate how much money you will need each month to sustain your lifestyle during retirement? Most people assume their current monthly expenses will suffice. But here is the reality: inflation, the silent cost creep, will steadily increase your expenses over time. For instance, if your family needs rupees 40,000 a month today, how much do you think you will need 15 years from now? With an average inflation rate of 7%, you will need rupees 1 lakh per month just to maintain your current standard of living. Are you financially prepared for that? In this video, let us find out how to invest your retirement corpus and maintain your lifestyle. Welcome to holisticinvestment.in. In today's world, the absence of traditional pension often becomes a major worry. But here is the good news: you can create your own pension. How? By starting early and investing a fixed amount every month. Consistent investments in high growth assets like equity and hybrid funds can help you build a substantial corpus to secure a monthly income of rupees 1 lakh. For example, investing just rupees 2,000 per month starting at the age of 25 can grow to rupees 1.3 crore by the time you retire at 60. Isn't that a small price to pay for a worry-free and comfortable retirement? How can you generate rupees 1 lakh in monthly pension after 60? Let's break it down. At retirement, your accumulated corpus needs to be strategically allocated across debt and equity based investments. But here is the key: your investments must deliver returns higher than inflation while remaining tax efficient. With the right strategy, you can secure a monthly pension of rupees 1 lakh and maintain your purchasing power over time. Investors generally fall into three categories: conservative, moderate, or aggressive. But how much corpus does each type of investor need to achieve this goal? What strategies can make it happen? Let's take a closer look. First, conservative investors. Conservative investors tend to avoid risk, preferring safer instruments that offer predictable returns. While this approach ensures steady income, can it generate enough for a comfortable retirement? Let's find out. Here is a recommended allocation for a 1 crore corpus. Allocate 25% of the corpus, that is 25 lakhs, to FDs offering a 7% annual return. This generates a monthly income of approximately 14,585. Invest another 25% in senior citizen savings scheme, which provides an 8.2% annual return. This translates to a monthly income of about 17,085. Allocate 25% to debt mutual funds with an average annual return of 8%. This results in a monthly income of approximately 16,665. Invest the remaining 25% in hybrid mutual funds, which have the potential to deliver a 10% annual return. This generates a monthly income of around 20,835. When you combine these, the monthly pension comes to about 69,170. Is 69,170 enough? If your goal is rupees 1 lakh per month, this conservative approach may fall short due to its lower risk and lower returns. Then what's the solution? To bridge the gap, conservative investors may need to either build a larger corpus exceeding rupees 1 crore or consider a slightly higher risk allocation by increasing investments in hybrid mutual funds, which offer better growth potential while maintaining a balanced risk profile. Next, moderate investors. Moderate investors have a higher risk appetite compared to conservative investors. They allocate a greater portion of their corpus to equity-based investments while still maintaining a smaller share in debt instruments to balance stability and growth. How can a 1 crore corpus be allocated to generate a steady monthly income? Let's break it down. Allocate 15% of the corpus, that is 15 lakhs, to FDs, which provide an annual return of 7%. This generates a monthly income of approximately 7,500. Invest another 15% in senior citizen savings scheme, offering an 8.2% annual return. This translates to a monthly income of about 10,250. Allocate 25% of the corpus to debt mutual funds with an 8% annual return, resulting in a monthly income of approximately 16,665. Invest the remaining 45% in hybrid mutual funds, which can deliver an annual return of 10%. This provides a monthly income of around 37,500. Adding these up, the monthly income comes to approximately 71,915. While this approach offers better returns than conservative strategy, it still falls short of the 1 lakh monthly pension goal. How to close the gap? What's the solution? To bridge the gap, moderate investors may need to either build a larger retirement corpus beyond 1 crore or increase equity exposure by allocating more funds to high performing large cap mutual funds, which can deliver 12% annual returns. By carefully balancing risk and reward, moderate investors can close the gap and achieve their retirement income goals more effectively. It is worth exploring a slightly higher equity allocation to secure a stress free retirement. Next, aggressive investors. Aggressive investors are willing to take on higher risk to maximize returns. They allocate a substantial portion of their corpus to equity-based investments while maintaining a smaller share in debt instruments for stability and safety. So, how can an aggressive investor allocate rupees 1 crore corpus to build a strong monthly pension? Let's break it down. Allocate 15% of the corpus, that is rupees 15 lakhs, to FDs offering a 7% annual return. This generates a monthly income of approximately 7,500. Invest another 15% in debt mutual funds providing an 8% annual return. This translates to a monthly income of about 10,000. Allocate 35% to hybrid mutual funds which offer an annual return of 10%. This yields a monthly income of approximately 29,165. Invest the remaining 35% in equity mutual funds which have the potential to deliver 12% annual returns. This generates a monthly income of around 35,000. Combining all these, the total monthly income comes to approximately 81,665. While this strategy offers higher returns, it still falls short of 1 lakh monthly pension target. What's the solution? The aggressive investor may need to either build a larger retirement corpus exceeding 1 crore or increase equity allocation further, particularly in large cap mutual funds which can deliver 12% annual returns over the long term. By embracing a slightly higher risk with a focus on equity, aggressive investors can bridge the gap and achieve their goal of rupees 1 lakh monthly pension. It is time to take the step forward to financially secure and rewarding retirement. We are moving on to the next topic, how to generate 1 lakh monthly pension. To achieve a monthly pension of 1 lakh, you will need a retirement corpus of approximately 1.3 crore. The question is, how should you allocate this corpus to secure consistent income? Here is a practical allocation strategy. Rupees 30 lakhs in post office savings scheme, rupees 20 lakhs in equity savings fund, rupees 50 lakhs in hybrid mutual funds, rupees 30 lakhs in large cap mutual funds. This diversified approach can generate a steady monthly income of around rupees 1 lakh. Refer to the table for detailed breakdowns. You may wonder whether the returns mentioned are realistic. The good news is that these returns are not just achievable but have been exceeded historically. For instance, equity savings funds have delivered average return of 8.67% over the last 3 and 5 years. Hybrid funds like balanced advantage funds have provided average return of 11.25% and 12.69% over the past 3 and 5 years. Flexicap funds, that is diversified funds, posted average returns of 16.69% and 17.95% over the last 3 and 5 years. Top performing funds have delivered even higher returns, which shows the potential of this investment strategy. Isn't this historical performance reassuring? Here are the few key points to consider. First, tax benefits. Under the old tax regime, senior citizens enjoy a tax exemption of income up to rupees 3 lakhs. Under the new tax regime, this limit increases to rupees 7 lakhs, making it more beneficial if there are no additional tax saving investments or home loan installments. Additionally, mutual funds are taxed only on capital gains, meaning post-tax returns are generally higher compared to traditional options like fixed deposits or bonds. For hybrid and equity mutual funds held for over a year, gains up to rupees 1.25 lakh per financial year are tax-free. Gains exceeding this threshold are taxed at only 12.5%, resulting in a lower overall tax burden. Next, inflation protection. To sustain your lifestyle, the return on investments must outpace inflation, currently averaging 6 to 7%. Investing in equity and hybrid funds is crucial to protect your purchasing power over time. Diversifying across debt and equity instruments ensure growth while maintaining stability. Next, withdrawal strategies. Mutual funds allow you to create systematic withdrawal plan, enabling regular withdrawals based on your needs. By withdrawing smaller amounts, your corpus can last longer. You can gradually increase withdrawals to account for inflation in later years. Next, risk tolerance. While the goal of rupees 1 lakh monthly pension is attractive, avoid taking excessive risk by investing your entire corpus in equity. Diversifying across debt, equity, and hybrid funds helps strike the right balance between risk and returns. We have reached the final segment, final takeaway. By starting early and implementing a well balanced strategy, you can build a stable income stream that outpaces inflation and supports your lifestyle. You can build a robust corpus to generate a monthly pension of rupees 1 lakh by diversifying your investment across asset classes like fixed deposit, debt mutual funds, hybrid funds, and equity funds. Diversify wisely, stay disciplined, and ensure your investments outpace inflation. The earlier you start, the closer you will be to achieving financial freedom in your golden years. Begin today. A detailed blog post on this topic is available on our website, and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.